Hello and welcome to Inderes TV. KONE released this Q3 report last week, and now I'm in the studio with Analyst Aapeli Pursimo to discuss the company. Hello, Aapeli. So let's start with the Q3. Were there any highlights in the report?
The Q3 was quite well in line with the expectations and no major surprises operatively. So basically pretty much a trademark KONE performance. But maybe a highlight was that the profitability improvement stayed intact, and now it was a 11th consecutive quarter in that sense.
All right. So the order intake was slightly above what we expected, or expectations in general, and revenue was largely in line, like you said. Does the strong order intake bode better revenue development in upcoming quarters then?
Maybe it's good to understand that, of course, could be some deviations between the quarters. So maybe you shouldn't make too big conclusions from just one quarter. But of course, you need order growth to get the top line growth.
Right.
So basically, of course, there is a positive, and there has been a positive trend for a while. So of course, that is a good thing, and also is in line with the expectations of the revenue growth for the coming years, and also the margin improvement needs the a volume growth.
All right. In China, new building solutions are still expected to decrease at double-digit pace, but the modernization is growing still. How significant risk is the situation in China's new construction, the kind of overall situation or picture?
It is decreasing all the time, and with the current pace quite fast. So year to date, the China's share of revenue has been 20%, and in Q2, company mentioned that around 60% of its business in China is new building solutions. So give or take, we are somewhere in the 10 to 12% of the company's total revenue. And so it is getting smaller, and basically companies also growing in the other areas in China.
Right.
So it's situations that won't change in the short term. That the market is still very weak in China. So it is expected to decline further, but of course, when its share of the whole business is diminishing, the effects are not that big anymore. So, of course, that still has an impact, but it's getting small.
Yeah, so not a big concern in that sense.
No, not that, especially if we compare it to like 2 years ago, it was a totally different game.
Right. So you expect KONE to achieve an adjusted EBIT margin of around 13 to 14% by 2027. What are the key drivers behind that development?
Of course, the biggest driver in that sense is that the business mix is getting better. So the higher share of the aftermarket revenue, which also in right now the situation is that the KONE is growing quite nicely in the aftermarket, so services and the modernization business, especially the modernization business, is growing fast. So it helps the business mix, the more profitable business, its share of the revenue to increase. And of course, there is also companies. There is kind of initiatives to improve it further. So basically, especially in the modernization business, there is the standardization and industrialization of the business model. So you get the wheel going there, and also get the scale benefits with revenue growth. And then in the service side, for example, there is scaling up the digital side of the business.
Okay, yeah. And then if we look at North America, the new construction solutions improved to a slightly growing level in the third quarter. How significant is this for KONE? And do you see it as more as a permanent trend or a short-term boost?
if we just look again the share of revenue in that perspective, the new building solutions in this year has been around 25%, if I remember correctly, and the US share of the total revenue is around 25. So if we use our calculation about China and its share of the NBS business, it's about third of the NBS solution. So then you get the magnitude of the rest, and of course it's like a positive thing, but somewhat limited, and of course to increase it from the stable level to increase slightly, it's not that big a difference, but still positive, and at least also a positive in that sense that it may show that the US market has shown resilience for the uncertainty surrounding, so slightly positive, but the magnitude is limited in KONE scale still.
Right. So it might offer some support in a difficult market elsewhere, but it's not a big share of KONE as a whole. Maybe.
Yeah. Of course, the like the main thing to KONE is focusing is the aftermarket, but of course you need to grow the installed base to grow the aftermarket, but still, yeah, it's a positive thing, but slightly positive.
Right. Then if we look at the main competitors or the peers such as Otis and Schindler, what about KONE's earnings and outlook compared to these? Has KONE succeeded in increasing its market share or in any region or segment compared to these bigger peers?
The reporting structures varies between the companies, so it's a little bit difficult to get the exact info in the certain areas, at least in this time. But overall, KONE's revenue has increased faster than the competitors recently in the constant currencies. So yeah, lately KONE has gained somewhat the market share, but in a longer period of time there is also like the small changes, but otherwise the situation has been quite stable for some time. But on the margin side, if we look at just about the margins, KONE is still below, especially below the Otis's levels. But the situation and it's pointing forward upwards with KONE. So let's see how it's going to get together in the coming years.
Right. Yeah, but at least not as a whole. KONE is not clearly weaker than its peers. It's doing on some levels better and otherwise.
Yeah, and especially if we take into account that the KONE's China exposure is larger than its competitors.
Right.
So basically, it's shown that it has been able to grow, especially outside of the China's NBS business. So, yep.
And then if you look at the valuation, what would change your view to turn the valuation more positive than it currently is? And where do we stand right now?
I would say the price is the moving part there, of course, in the short term. But if you just look at the valuation multiples right now, they are high. But of course, they are in some sense in the justifiable range for defensive quality company like KONE, given also the earnings growth outlook for the next years. But at the same time, it's kind of hard to see any upward pressure in the multiples,
right,
if there is not the clearly higher earnings growth than expected. So I would say that the current price is somewhat in the neutral territory.
Okay, yeah. And finally, what's our recommendation at the moment?
We are currently at the reduce, and the reasons basically are what we just discussed.
Yeah. Okay. Thank you very much, Aapeli.
Thank you.
So KONE reduce recommendation. New building still quite soft, but aftermarket and modernization performing better. Read more at inderes.se.